Hey, what's up, everyone? Welcome back to Finanzergy, the channel where we make finance easy and accessible for everyone. If you've been thinking about investing in the stock market but don't know where to start, you're in the right place. In today's video, we're going to cover everything you need to know to begin investing like a pro. We'll talk about the basics, strategies, and tips that will help you navigate the market with confidence. Let's jump right in. 1. Understanding the stock market. Before you start investing, it's crucial to understand what the stock market actually is. The stock market is essentially a marketplace where companies sell shares of their ownership to the public, and in return, investors like you can profit from the company's success. When you buy a stock, you're buying a small piece of a company. If that company does well, your investment can grow. But if the company performs poorly, your investment could lose value. So, the stock market is about balancing risk and reward. 2. Knowing your risk tolerance. One of the most important steps in investing is knowing your risk tolerance. How much risk are you willing to take on in order to achieve the returns you want? Risk tolerance is different for everyone. Some people can handle the ups and downs of the market without stressing out, while others might feel anxious during a market drop. It's important to assess your own comfort level and choose investments accordingly. 3. Setting investment goals. Next, let's talk about setting clear investment goals. What are you investing for? Are you saving for retirement, a down payment on a house, or just trying to grow your wealth over time? Your goals will determine your investment strategy. For example, if you're saving for retirement, you might want to focus on long-term growth. If you're saving for a short-term goal, you might prioritize more stable investments. 4. Choosing the right investments. Now, let's talk about how to pick the right investments. When it comes to the stock market, there are two main types of investments: individual stocks and exchange-traded funds, ETFs. Individual stocks are shares of a specific company. If that company does well, your stock price goes up. But remember, this can also be risky if the company doesn't perform well. ETFs, on the other hand, are a collection of different stocks, so you're diversifying your investment. They're less risky than individual stocks, and they're a great choice for beginners. 5. Diversification is key. Speaking of diversification, this is a strategy that every successful investor uses. Diversifying your investments means spreading your money across different assets or sectors, so you're not putting all your eggs in one basket. This reduces the risk of your entire portfolio taking a hit if one stock or sector crashes. By investing in a mix of stocks, bonds, and other assets, you're protecting yourself from market volatility. 6. The importance of long-term investing. One of the best strategies for growing wealth in the stock market is to invest for the long term. The stock market can be volatile in the short term, but historically, it tends to rise over time. By holding your investments for the long term, you allow your portfolio to ride out the ups and downs of the market. Patience is key when it comes to stock market investing. 7. Understanding dividends and compounding. Another important concept you need to understand is dividends. Dividends are payments that companies make to shareholders, usually on a quarterly basis. By investing in dividend-paying stocks, you can earn passive income from your investments. Reinvesting your dividends back into your investments is called dividend reinvestment, and this is where compounding comes in. Compounding allows your money to grow exponentially over time, which is why it's so important to start investing early. 8. Staying disciplined and avoiding emotions. One of the hardest parts about investing is dealing with emotions. The market can be volatile, and it's easy to get caught up in fear or greed. Successful investors are disciplined. They don't make emotional decisions based on short-term market movements. Instead, they stick to their long-term strategy and ride out the ups and downs. 9. Learning from mistakes and staying educated. Investing is a learning process. You will make mistakes, but don't get discouraged. Learn from them and keep improving your strategy. Stay educated by reading books, watching videos, and learning from other investors. The more you learn, the better decisions you'll be able to make. 10. Getting started today. Now let's talk about the most important thing, getting started. The best time to invest was yesterday, but the second best time is today. Even if you start small, just begin. There are plenty of apps and platforms that make it easy to get started. Start with a low-cost index fund or ETF and make consistent contributions. Over time, your investments will grow. That's it for today's beginner's guide to investing in the stock market. Remember, investing isn't about making quick money. It's about making smart, long-term decisions that will pay off in the future. If you found this video helpful, don't forget to hit that like button, subscribe, and turn on the notification bell so you never miss an update. Drop a comment below about your investment goals, and I'll be sure to reply. Thanks for watching, and as always, happy investing.